evening, good morning, good afternoon, wherever you are in the world. Welcome to our trading psychology webinar. Now, we usually do our webinars on Sundays, but sometimes we'll do them on Mondays. I'm trying to allocate it to as many people as possible. First of all, thank you for being here. And if you can't be here, you can always watch it back. So thank you for watching it back. Thank you for your contribution. Thank you for your ideas. Thank you for your positive feedback. I'm just so happy that we can be here together and focus on various topics of trading psychology that can help us on your trading journey. Now, today, though, I wanted to add Stoic wisdom into trading psychology and into your trading strategy, because actually the theory of Stoicism and what Stoicism is about very much lies with how we should be behaving in the markets as traders. So if you remember, if you are one of those traders that is keep on coming back to our sessions, then you will know that I drop in Stoicism here and there when we talk about different trading psychological theories. And I did say that eventually I will do a topic on Stoicism. And I think it is such wonderful topic when I myself eventually discovered Stoicism about 4 years ago, when I actually started reading about it and going into the theories about it and learning more about the meanings and exploring it. It really has helped me. And it is one of those things. And there are some particular books that I go back to over and over again, because I feel like you can't just read a book on Stoicism once and understand, acknowledge, and utilize all of the theories, because I feel like every time I go back into those books, they help me in different ways, because I pick them up at different stages of my life. And as I read certain paragraphs and Stoic theories, I then feel like they relate for that particular period of time in my life. And I want to present it to you, and I want to make it relatable to you within our subject of trading psychology, and for it to help you your trading strategies and how perhaps you can implement certain theories of Stoicism into your trading routine, which is pre-analysis or post-analysis, or how you can perhaps carry yourself as you are sitting in a trade. So I really would want you to, treat this session as an introductory session into Stoicism. Perhaps if you already have the knowledge of Stoicism, that's fantastic. Maybe it's going to be a nice recap for you. Maybe you will even learn something new. For those of you who have not really explored Stoicism before, it is going to be a great foundation to kind of build on, because I am going to open the topic of Stoicism to you, then make it relatable to trading, and then I would want to go into the pre-mortem strategy, that specific strategy that we can implement into our trading. And I will explain why specifically I want to focus on pre-mortem. Now, the reason why I want to focus on pre-mortem is because pre-mortem strategy focuses very much on what if the things will go wrong, completely not to the plan. And majority of the time, the reason why traders feel high levels of anxiety, high levels of emotions, is because they panic as they are in a situation. They don't have a plan how to act within that situation, and that makes them highly emotional, and therefore their decision making is very much impacted by that negative emotion, and therefore they will experience negative behaviors, self-destructive behaviors, etc. Whereas if we apply pre-mortem and we are going to plan for any possible scenario that may go wrong in the markets, this is where you can prepare in terms of action, what you are going to do when this goes wrong, what are you going to do when you input the wrong lot size, what are you going to do when you're going to input wrong stop loss size, what are you going to do when the price runs in profit, and all of a sudden some economic events happens and the price turns around and goes into your stop loss. We know that those unexpected events are the things that very often trigger us into behaving a certain way because of the emotion that we experience. And very often the emotion is tied in with anxiety, with feeling stressed, with feeling like things are unfair, and feeling that heightened frustration. So this is where when you actually have a plan and you think, okay, this is what I would do if I hit bigger stop loss, or if I input wrong lot size, or if I make a mistake, those are the things that I'm going to do. Then you are decreasing the chances of panic. You are decreasing the chances of self-sabotaging yourself. So this is the reason why I want to dive into it. And also because the way Stoicism works. So I want to go into the Stoicism and really explain the beauty of that ancient philosophy, and how it really can help you to be more transformative, and how in the world of trading, where everything seems to be at high stake and stressful, and still a high percentage of people are not as successful as they could be because they have those skills, it really can help you to evolve and move forward. Okay, so those are the things that I want to focus on. And again, if you're a returning trader, welcome back. And our sessions will vary sometimes from Sunday to Monday, but next session is Sunday again. Then Wednesdays, this is where we are going to apply our theory into action. So today we are going to talk about Stoicism, we are going to relate it to trading, and then on Wednesday we are going to make it actionable, something that you can build into your routine. And again, I would love to do case studies. So as you are listening to this webinar and you feel like, I wonder how this particular problem or this particular situation Paulina could help me to break down or understand how I could utilize Stoicism into breaking actions down, understanding things on a deeper level, and implementing it. So, again, as you are listening and you feel like this is very relatable, I would like her to help me. Then we can, with obviously securing your identity, we can use your example in a workshop and we can put it into action. Okay, so the reason, just what is Stoicism? So, Stoicism is an ancient philosophy, okay, and it's a philosophy that has been founded in early 3rd century BC that teaches development of self-control and fortitude as a means to overcome destructive emotions. So the question is, how can a philosophy that's over 2 millennia old be relevant to modern traders? And the answer lies in the core of Stoicism, which aligns remarkably with the mental and emotional challenges that traders are faced with. So that is managing the emotions, anticipating and dealing with challenges, and Stoicism will teach you how to focus on what you can control and letting go of what you cannot control. And of course, that in trading can really help you to maintain the right composure during market volatility, and where traders are very often swayed by fear or greed. By understanding and actually practicing the Stoicism, you can cultivate that mindset and start viewing things for what they are. And you can start reducing those impulsive decisions driven by your emotional responses, because the drive of the emotional responses often come from the things you cannot control. But still you experience that emotional drive and you think, why is this happening? The markets are against me. The market makers are chasing me. I'm just unlucky. The market knows when I'm putting my stop loss. And all of those emotional responses are driving that force of your self-destruction. But when you actually understand that you can manage your emotion and kind of implement, all right, how about I just focus on what I can control? And you can control for sure one important aspect of trading, and that is you. You can control you. And really, that is your number one job. Before you will try to dive into other aspects of control, and of course, that could be risk management, that could be your entries, that could be your exit points, that could be the analysis, that could be the techniques, etc. All of that only matters if you have control over yourself. Because when you have that control over yourself, then you will be able to implement the right entry techniques, the right exit techniques, because you will not act out of emotion, but you will act out of control, out of what you understand that is happening. So it can really help you to emphasize on logical thinking and encourage you to view the challenges as actually opportunities for growth. So, as you can see already, Stoicism is very much tied in with everything that we talk about in trading psychology and all of the webinars that we have talked about in terms of trading psychology. All of it very much is going side by side. So, by adopting that Stoic perspective, you can proactively anticipate potential challenges, potential setbacks, because everybody knows that potential setbacks and potential challenges are part of growth, because only the setbacks and the challenges will give us that opportunity to actually prepare in adverse scenarios and develop more strategic responses and reduce the impulsiveness and adapt, which is necessary in changing market conditions, because that is something we need to learn how to do. So I really want to focus on this topic because I really feel like it will help you to improve your decision making. And like I said, though, this topic here, our webinar and the workshop that we are going to do, so we're going to spend some time on it, is a foundation, though. I will want you to then pick up a book on Stoicism, which, by the way, I have a great recommendation. And I will want you to dive in deeper. And I would even like to propose something which I'm going to follow up on Discord after this session, that every single person who can and has availability to buy the little book of Stoicism, and I'm going to give you the name and I'm going to give you the author, and to make it a little challenge between all of us, that everybody reads that book by the end of December, come into January, when you will have new ideas, new goals, a new set of milestones that you will want to achieve. And I think when the implementation happens properly, and when you will dive in into those theories, and when everybody is on the same page reading the same book, this is where the real spark and discussion is going to happen. And this is where you really are going to explore it and see how it can improve your decision making, because you will focus rationally and you will aid the clearer image about objective decision making. It will encourage you to detach from short-term emotional reactions. And you will see that bigger picture, because essentially any self-destructive decision in the markets comes from the short-term emotional reaction. It has nothing to do with the reality and your potential in trading, because your potential, based on trading numbers and mathematics, most of the strategies work, as long as you will allow for that bigger picture to play out over a longer period of time. So the Stoic detachment is here to allow you to make decisions based on the analysis, on the strategy, on the risk to reward, on taking losses, on taking profit, on taking break even. You will more focus on the rational behind trading rather than the noise of emotions that pop up here and there, and you will just see that, okay, even if you have 3 losses in a row in one day, whatever, it's just one day, let's move on. The next day is a fresh day. One trade's outcome doesn't dictate your next trade's outcome, but you allow for that losing one trade to dictate further trades. But this is where we are going to put stop to that. Okay. And I really want you to progress through this session and explore those principles in depth and learn how you can integrate them into your trading strategies, into your trading routine, into your mindset, into your trading plan, into the way you observe things, into the way you think about things. So our goal is not just to become better traders, but to cultivate better trading practices. Practices that are balanced, practices that are thoughtful, practices that are resilient. Okay? That is the focus. And this is where we're going to tie it in with trading even more. And this is one of the quotes of Stoicism: grant me serenity to accept the things I cannot change. Because even today, when I was driving in the morning, I was listening to a podcast, and the podcast was with Mel Robinson. I very much like her, and I like the way she thinks, the way she analyzes things. And she says that she started applying the theory, let them. Whatever happens in terms of other people, and she was specifically talking about people when she was, talking about that theory, but we can very much apply it to Stoicism, very much apply it to trading, very much apply it to a lot of different things in our lives. And she said, the sooner you are going to let go of the things that you can control, which is very much tied in with Stoicism, the sooner you are going to be happier, the sooner you are going to achieve more, the sooner you are going to be less stressed as a human being. And the theory is just let them. Just let it be. Instead of actually talking to yourself and try to explain things, just say, let them. It's okay. It's fine. If the price goes straight into your stop loss, let it. Let them. Fine. If the price moves into profit, then goes into stop, let them. It's all right. If the price goes without you, let them. It's just one piece of data out of your whole trading career. And you are allowing for that one piece of data to dictate your future as a trader, your financial future, and your career as a trader. And we're not going to let you do that because we want you to be successful. And I want you to work up to your fullest potential. So, like I said, Stoicism will teach you wisdom. It will teach you courage. It will teach you justice. And it's going to really help you to focus on rationality, emotional control, concentration, and what's within your control. So the key principles we will be focusing on is acceptance of what cannot be changed. That's it. Acceptance of what cannot be changed. Number 2, we are going to focus on actionable aspects. What are the things that we can focus on? Where should we expend our energy? And then we're going to cultivate the inner peace. Okay? Because Stoicism advocates for inner peace, for equanimity, for being peaceful and being in control of your emotions despite of the external events. Because we talked about it earlier in previous webinars and workshops, there are things in your life you cannot control. And those are the silly things like the weather, like what the other person's going to say, whether someone's going to bump into you in the market, whether, the way the market is going to move, whether it's going to consolidate or not. There are just so many things you cannot control, but the greatest aspect of control that you have is within yourself. So I really want us to implement those knowledgeable kind of lessons from Stoicism into acceptance of events outside of our control. And I want us to really focus the energy on the things we can control. So essentially, what I am saying is, I want you to focus on you, especially over a period of December, where perhaps the markets will slow down a little, perhaps things will not be the greatest, perhaps this and that. I want you to stop pushing. I want you to stop trying to force things. I want you to focus on you. And I want you to think how Stoic philosophy can help you with your trading strategy development. So, traders are in control of how they develop the strategy. So, that is your control, how you are going to test it, how you are going to refine it, how you are going to collect data, whether it's going to be a back test, whether it's going to be a forward test, whether you're just going to mark through the charts every single day, whether you're going to do all of those things, and that could include also whether you're choosing to use indicators or not. Why are your entries? Why are your exits? What is your trading style? Day trading, swing trading, scalping? What are the things you are going to tune into? Because the worst things the traders I keep on doing all the time is, when something does not work for a short period of time, they jump straight into another thing, yet another thing, yet another thing. But no, how about tuning into your current strategy? Refine it to the finest part in terms of your entries. What is your greatest entry? What is your greatest possible scenario in the markets? What is the worst scenario in the markets? Then you can think about risk management, and that can be very much attached to those entry criteria and exit rules. Because risk parameters are completely in your control. Yes, there will be events where there is going to be volatility, where instead of hitting -1R, you may hit -2R, and there are certain aspects of trading that are absolutely outside of our control. But for the most part, you do actually have control over the risk per trade, over the stop loss levels, stop loss sizes, over the percentage that you are going to risk per trade per day, per session. You have control over those things. And whenever you feel out of control, you should be making a list of the things. Those are the things I can control. Because it's so easy to forget about it when you are sitting in front of the chart and you feel like the market gods are against you, and you forget actually the power that you hold within you as a trader. And then, of course, we're going to build on that. There is emotional discipline. Emotional discipline and the control over the emotions that are directly, challenging you. That is something that you can control only because it is uncomfortable emotion, only because you are faced with a challenge, only because it feels uncomfortable does not mean you have to give in to it. You don't have to give in to it. You can still control yourself. You can still stay stable about the situation, and you can still approach it gracefully. And of course, what is going to help you? Practices like mindfulness, pre-trading routines, post-trading reflections. All of those things, again, are within your control. You can prepare before you enter the markets. You can prepare after you were in the markets, and you can reflect, perhaps, actually, rather than prepare, reflect. You have those things that are in your control, and those things will help you to become better and have better control. So don't think that the control, emotional control in the markets will just appear on its own. Never. It will never do that. It will require from you to skill up. And it's your job to skill up. How can you skill up? Again, focusing on the things that you can control. So it really is all about continuous education and learning, and about putting that effort into educating yourself about the markets. Maybe not about, new trading techniques, but about understanding financial news, about economics, about What does it mean when, there is a crisis happening in the world, where most of the money is going to, move into? We already know the safe havens and, how the markets move. What does it mean when euro is struggling in terms of, inflation? What could that do for the currency? Maybe during that period, you will want to switch up and actually start trading GBP USD rather than Euro USD. Those are the things, again, that you can control and you can decide upon. You have more control than you realize in the market. And of course, what is the thing that is going to lead you to all of that? Trading schedule and routine, and having certain hours and certain times, and time to reflect, and time to analyze properly, and time to establish certain disciplined routine around trading that is within your control, whether that is the morning routine, during the day routine, evening routine, or maybe all of it. Because maybe at the start, that's what you need. You need hardcore routine in the morning and in the evening and during the day. And that's all right, because that hardcore routine is going to teach you how to be disciplined outside of the charts and therefore on the charts. And you will cultivate good work ethic and strong willpower, because never ever rely on motivation. Once you start relying on motivation, this is where everything will start rolling downhill. Motivation is just like any other emotion, and it will get you absolutely nowhere. But discipline, routine, timetable, good work ethic is going to get you to the top, is going to get you to your goals. But it's time. It's time to get serious. If it's December and if you have not achieved what you set yourself to achieve this year, that's all right. That's cool. Honestly, don't worry. You've got so many years ahead of you. But take it as a signal, take it as a feedback process. That means it's time to change something. That means that the things you have been doing over and over and over and over and over again are not working, because every time you were not sticking to your rules, you were not disciplined, you were doubting trading psychology, you were doubting inputting good routine into place. Every time you were doing that, you were kind of thinking, oh, maybe I will get away with it with those shortcuts. But in trading, ladies and gentlemen, there are no shortcuts. And it's all about adapting, and it's all about learning, and it's all about reflecting, and it's all about adapting again, and just keep on going in that cycle. It's all about continuous growth, because market conditions will forever stay outside of our control. And what we can do is adapt with our strategy, with our response to the market. Whatever the market conditions are, remember, whether there is some economic crisis, whether something bad is happening in the world, and it will have an impact on the markets, you still have the control how you're going to respond, because you don't always have to trade. Secondly, you can put bigger stop loss sizes. Thirdly, you can start learning more about it and what should you do in those situations. And of course, seek more assistance, seek more knowledge. Start learning from other people. Start seeking help, perhaps, or start talking to others, or start journaling and recording it all, so you know how you can actually, reflect on certain situations, on certain kind of specifics that are happening in the market, and how we can discuss it with other traders. All of those things are controllable things. And that's not to say overwhelm yourself with new information, this and the other. Absolutely not. I don't want you to overwhelm yourself, but I want you to be able to dig in for the right information that is going to continuously push you to greatness. And again, this is very much related to our last session about the wheel of trading, which is the wheel of balance, okay? And that is all about your health and well-being. That is in your control. Your physical health, your mental health, getting adequate sleep, exercising, the appropriate diet, engaging in activities that will reduce your stress. So I don't care what those activities are, whether you're going to meditate, whether you're going to box, whether you are going to swim, whether you are going to do yoga, go to the gym, walk, whatever that might be, as long as those activities are reducing your stress. That definitely has an impact on your trading performance. So there is a formula that is already building in terms of routines, in terms of timetables, in terms of stress reduction activities, in terms of diet, well-being, sleep. I don't want you to be sitting, 4 hours after trading session and back testing till 12 a.m. and then sleeping only for 5 hours to then do it all over again, etc., etc. Because yes, in a short term, sometimes we have to do that, but overall, you are going to burn yourself out. I don't want you to burn yourself out. I want you to schedule things appropriately that are going to have an impact on your performance, on your well-being, on your longevity as a trader within the aspect of our career. And look, don't be so afraid of using trading tools and backtesting kind of programs and different resources. There are so many things that can help you with the decision making. And I mean the simplest of things that now had become like obviously the standard, like our phones. And I told you already, you could set yourself alarms, reminders. You could set yourself literally a reminder that is checking on you and saying, are you okay? Breathe. It's fine. Whether you are sitting in a trade or not, it's good when it pops up and we've got that prompt to say, get up and get some water. Get up and go for a 10-minute walk. And those are those little things, little nudges in our day that can have a huge impact on the way that we behave and that we build habits, because those small little changes are the changes that are going to help us to build a new momentum. It is not the big changes in life that count. It is those small incremental changes that you are going to repeat over a long period of time that can change your life. Always remember this. It's not about tomorrow waking up, going to the gym 5 hours a day and meditating 5 hours a day and then trading and doing all those crazy things. No, it's about small incremental changes, small habitual changes, small little reminders. And those small things over a period of time build the momentum. And that momentum eventually can change your life. Okay? So remember, Stoic application in trading is in emotional control, decision making, acceptance of losses. Those are the things that can help you. Okay, so this is where I want to give you an example on a trader. Okay, a trader. Let's call that trader Alex. Okay, and I just give you an example, and this is not pre-mortem. This is not pre-mortem. This is just something that you could implement into your day that could potentially help you. Now, some of you will think, wow, that's a brilliant idea. But some of you may think, well, actually, I don't think that would work for me. However, you are exploring any type of theories or any type of methods in terms of trading psychology, any your behaviors, any your habits, I always say just give it a go. Like, you can't lose by just trying it out and implementing it. Just give it a go. So let's start. So let's say preparation for volatile market conditions. There is a lot of red news folder news, but the trader still wants to trade. So the Stoic reflection for that trader is preparation for volatile day in the markets. Okay. So the Stoic reflection would be Alex would start that day with a Stoic reflection to remind himself that volatility and during the day when we have a lot of red folding news is a natural part of the market that is outside of his control. And specifically on the day when we have a lot of red news folder, the markets may consolidate pre-release, or they may actually be very volatile, because then after the markets start releasing the data, the volatility is there. Okay, so this is the Stoic reflection. Those things are not in my control, and it's a normal, natural factor of the market. So what's the acceptance? Because something has to come from that reflection. So reflection and then acceptance. Acceptance is, okay, I am accepting today's market movement, and the market movement of today's market conditions is not a reflection of my worth as a trader, but rather than that, it's an opportunity to apply a different strategy to capitalize whilst it is extremely risky, or just to stay away and observe the markets. But it is not a reflection, that volatility or the markets that consolidate, that is not a reflection of your trading skill or your abilities. That's just a reflection of a single day in the markets. That's it. Then let's say we have a lot of market fluctuations. So focus on what you can control. What is the news that caused the sudden spike, in the markets? There is volatility. Let's say 15 minutes candle went up sharply. It closed with a strong wick, moved down sharply. All right. So Alex, the trader, can focus on predetermined strategies, risk management rules, and execution plan. Okay. So does your plan say, well, despite whether there is a news release or not, if I see price coming to a certain supply or demand, I'm still going to buy or sell? Or does your rule say, actually, when there is red news folder, I'm going to wait and I'll see how the market settles, and then I'm going to approach it during next trading session or the next day? So because of that, you're giving yourself that emotional distance from what happened, and you are maintaining the emotional distance, and you think, okay, I'm assessing this situation objectively without the fear of losing or winning or excitement. I'm just seeing for what the things are, because I'm preparing for the situation. And based on that preparation, I have to accept the outcome. Okay, now let's think about rational decision making. So cognitive discipline. So Alex exercises cognitive discipline, a Stoic practice to analyze the market's movement based on his experience and current information, rather than reacting impulsively. So that relates to those traders who marry a trade and they say, no, I want this to happen in the markets. The market should go up. We've got so much liquidity left. The market should go up. No, take the market for where it is. This is what happened. This is the data release. The market is actually moving down. And based on this entry model, we keep on breaking the lows, and I should just go with the order flow. So even though you feel that pressure, I should act now because, oh my God, the move is happening and it's going to go without me and it may drop 100 pips, chill out. It will drop 100 pips today or maybe tomorrow and maybe in a month. Doesn't really matter. Just wait for the right conditions. Wait for your entry model. Align your entry criteria, your exit criteria. Again, what happens in one day is just a reflection of one day. You are not going to get rich based on one volatile day in the markets. You will get rich by consistently taking a piece out of the market, and sometimes you will not, and sometimes you will give it back and allow for it to play in your favor over a long period of time. So then think about the Stoic review and kind of think, okay, after the trading session, regardless of my outcome, which we discuss all the time, so this is where we are more performance driven, and we think, okay, so let me, in a Stoic manner, examine the decisions and behaviors from today and identify if actually my decisions were controlled or out of whack and I was emotional. and then think, okay, based on that review, how can I continually improve? What should I use from this review to help myself to move forward? What should I investigate further? What do I do? Do I make irrational decisions? Do I make self-destructive decisions? Okay, so perhaps the rule is going to be now, you do not look at the charts for at least an hour after red news folder data release, because otherwise you make silly decisions. You jump into things too fast, where actually what you need to do is allow for the dust to settle and then reestablish, okay, is my entry model going to show up here? No, it's not. Okay, moving on to the next day. So, don't allow for your losses to tarnish your confidence, and don't allow for your winners to make you overconfident. Stay neutral about it all, because your job is really to keep on focusing on what you can control. And what you can control is to continuously refine your approach and your decision-making process, because I tell you the key thing, and the only one thing, if you are going to take out of this webinar, this is the thing that I want you to take out of this webinar, and it is not about the quality of your strategy that is going to make you profitable in the markets. It is the quality of your decisions in the markets that is going to make you profitable in the markets. I will repeat myself because this is the message I want you to write as a tweet, and I want you to pin to your profile. I want you to print it out, put it as your quote on your phone. It is not the quality of your strategy that is going to make you profitable. It's the quality of your decision making that is going to make you profitable in the markets. That is what is going to make you or break you, your decisions. Because genuinely, most strategies work. I really, really, really do believe so. Now, I want to go into pre-mortem technique, okay? And specifically pre-mortem, like I've explained at the start of the webinar, is because very often traders are surprised by what happens in the markets, and they are not prepared for what is happening in the markets, and therefore emotions are running high. As emotions are running high, the decision making and logic is running low. And this is where emotional decision making, and this is where self-destructive behaviors sneak in. So we want to, with pre-mortem technique, to apply a preparation plan for everything that could possibly go wrong. And if you develop those scenarios of everything that could possibly go wrong, you will have a solution for each of those situations. And as you are going to develop a solution, then you no longer are going to make emotional decisions, because those solutions that you're going to develop are going to be developed by your logical brain, by your logical thinking. So the pre-mortem is going to help you to manage yourself. And it's different to post-mortem. So post-mortem, so pre is before, post is after. Post-mortem is more of a reflection, like Alex did. At the end of the day, I'm going to reflect. And that in itself is extremely useful. But pre-mortem helps you to prepare and organize and have solutions ahead of time. So then plan for things not going to the plan, essentially. Plan for things not going to the plan. So this is what I want you to focus on. So scenario number one, and there are certain steps to take, is to develop a visualization. So when you think to yourself, okay, and I'm not going to make it trading related. Actually, I'm going to make it trading related. So let's imagine a Forex trader, and let's now name him Jordan. Okay. Jordan is about to implement a new long-term swing strategy that involves technical analysis and trading on the daily chart time frame. Okay. So the pre-mortem scenario is, it is 6 months into the future. So look, the background. Jordan is a forex trader, and he's about to implement a strategy, swing trading strategy, that involves technical analysis. Okay, and he's trading on daily time frame. And Jordan decided that because he's so busy in his 9 to 5 and his family life, that he just wants to stick the trade on, and he wants it to play out over a few days. All right, and he wants to spend less time on the charts and analyze things on a daily time frame. So the pre-mortem scenario for Jordan would be, okay, so what if in 6 months into the future, looking 6 months into the future, the strategy is not going to give me the results that I wanted? What if the trading account is actually going to be down by 20%? Okay, so that is that worst case scenario. So steps into pre-mortem. So Jordan, as a scenario number one, starts visualizing this potential future, and he reflects on it, and he thinks it's a failure. It could go wrong with my trading strategy. And this is where, as number two, he identifies potential causes of him being on minus 20% and seeing it as a failure. So it could be his overestimation of his edge. So Jordan may have overestimated the effectiveness of his technical strategy, and he underestimated the market volatility, and perhaps the conditions have changed and the strategy did not actually account for increased volatility because something happened in the world. And Jordan actually, would have oversight the risk management, where he miscalculated the risk on his trades, leading to larger losses than expected. And what could have also caused the failure in a 6 months time is Jordan's emotional trading. That there were moments, in fact, that Jordan would have led to making decision driven emotions rather than trading plan based emotions. And what did Jordan also think about in terms of why could he fail in 6 months? Well, lack of adaptability, because the strategy may have not adapted when he shown him the signs of underperformance. So Jordan was not flexible enough. So those are the things that Jordan could think, okay, I have a plan here, but those are the things that actually could have an impact on me failing and not achieving that plan. So now he needs to think, how can I prevent all of those things from happening? Okay, so for example, as he said, well, I perhaps overestimated my edge and the effectiveness of it. So then what is the preventative solution? Okay, I need to backtest more, and I need to take into consideration different market conditions to ensure that my strategy is robust. So for example, is your strategy also working over summer period? Is your strategy also working over December period? Is your strategy working during volatile market conditions when there is a lot of red news folders? Does your strategy work well during the first week of the month when there is non-farm payroll? Do those things have an impact? Have you taken into consideration a large sample size of the data? Because some people would say, oh yeah, I have prepared, I have backtested. Well, maybe they have only backtested 1 month, and it's very easy to have a really good month in a market with a strategy that may actually not produce profit for the rest of the months. So I always would say 3 to 6 months is the average that you should focus on. All right, so then let's say that Jordan, as he specified before, he underestimated the market volatility. So then he needs to think about the risk assessment. Okay, so I need to review the risk management approach to ensure that it aligns with the account size, with my risk tolerance, with the market's volatility, or maybe with the account balance. Will I adapt my risk? Will I not adapt my risk? Will I adapt my risk when my account balance is higher? Will I adapt my risk to lower when my account balance is lower, so I can avoid for my account going all the way to minus 20%. Now, he also identified about emotional discipline. So then he can think, okay, what are the rules and what are the things that I need to do to improve my emotional control? What are the mandatory cool-off periods after losses? So if I take a loss, let's say he entered trades, he can only enter 5 trades at once. And let's say, obviously, if he would be entering with 1% risk, he's exposing himself at once to 5% risk. Should Jordan be doing something like that? Or when he actually enters larger number of trades, he should be reducing his risk. So his overall exposure is only always 2% per day. Those are the things that need to be taking into consideration. Okay, so how else could he prevent? By performance review, establishing a regular routine where he reviews his strategy on monthly basis, weekly basis, and he does the performance assessments. Because I have a serious question to all of you. How many of you actually look at your performance and you can review yourself on daily basis, and you can even implement diaries where you would journal your trades, etc. But how many of you review your quarters? Have you performed well during the quarter? What are the things that you have learned from this quarter to implement to the next quarter? How you are going to perform better? What are the things that work, that haven't worked? How you are going to adapt your techniques, your entries? Did everything align? Those continuous reviews are showing you if everything is still intact. It's almost like when you regularly review the health of your car, eventually it's going to wear out. So you have to keep on check. Is the oil right? Is this right? Is this right? And this is with your strategy. You just have to ensure that you are okay as well. And of course, what is the prevention of, what could happen in 6 months, which could be disastrous for Jordan, is commit to ongoing education and learning and market analysis and development skills within my strategy. So not searching for something new, but actually improving my strategy, my entries, understanding my entries. Why did this work? Why did this not work? Why did I cut my trade short here? Why did I not? What works best for me? What is the best risk to reward ratio? What are the things? What are the exits? What are the levels that I need to pay more attention to? What are the things that I have missed out on? All of those things continuously have to be developed. So it is for Jordan the continual reassessment where he is scheduling those monthly reviews and strategy performance and using the numbers, the quantitative metrics, as well as, the journal with the entries, and he's reviewing it all, and he's kind of, thinking, okay, how can I prepare for all of these things and those flaws of the strategies that may occur? How am I going to prepare for them? What am I going to do? And also remember, within any strategy, within any mathematical edge, there are key things to remember. A human error. We are humans, and the human error will happen. And this is where you need to catch onto those things early. Have you slept well? Are you feeling okay? Is your well-being okay? Is your health okay? Have you eaten? Have you drank? Are you ill? Do you have a cough? All of those things have a huge impact on your performance. It's genuinely, this is the reason why I always implement so many different, theories and anecdotes from sports people, from being an athlete, because they need to have all of those things in check in order to perform. So do you. So do you. Okay? So do you. So now, this is where, after you have all of that information, those are the kind of things that you could kind of, integrate into your trading plans. And this is maybe not as much as trading plans, but more kind of thinking about the routine, that you're going to perform before your trading. So you could build the pre-mortem into your trading plan. And for example, before finalizing your trading plan, you could schedule a time to conduct a pre-mortem analysis, and you could, dedicate a session where you would kind of look into the future with your trading plan and think about, okay, my trading plan actually failed and did not meet my objectives. So then you could identify potential failure points. What systematically happened that could do it. So then you can systematically work through your trading plan to identify anything that could go wrong. Consider strategy specific risks, psychological factors, market conditions, technology, brokers, this and the other risk, challenge some assumptions. You may have an assumption, oh yeah, I should easily get 10% per month. Like, why do you think that? Do you have reliable data source that is telling you this? Okay, so let's say you've got 3 months of data. Okay, 3 months is good, but try now building 6 months of data. Okay, you've got 6 months of data, build more. So your confidence about your trading plan and your setups is growing. You understand it. You should understand your strategy inside out. There shouldn't be but and if and what should I do. You should be continuously comprehending that information and then relating back to it and understanding it, how you can become better. So it's all about documenting and assessing the risk. And then it's all about adjusting that trading plan. And it's all about then thinking about, the development and what kind of risks you identified. You could identify a risk that actually something you've not taken into consideration because you had 3 months of data, and after collecting 6 months of data, you are seeing that actually you could run 7 losses in a row. So if now you have discovered that you could have 7 losses in a row, perhaps you should be decreasing your risk per trade, risk per day, risk per week. You should be thinking along those lines, because really, if you were working for a hedge fund, you would have a certain risk assigned to you for a duration of a week or a month, and then you have to split that risk in between different little investments that you are going to make. Nobody's going to allow you to just whack that one risk on one trade. There are a lot of different things that you will need to do. Okay, so essentially, that was the session. And I don't want to be, keep on going. But I hope that you have taken key takeaways from here. And those key takeaways are about the focus of what you can control rather than what you cannot. To not allow for the things that you cannot control to stress you out, because we need your well-being. We need your health. And number 3 takeaway is that is not the trading strategy and the quality of the trading strategy, but the quality of the decision making that is going to help you to move forward and get to where you need to be as a trader. So guys, thank you for being here. Thank you for your interactions. Thank you for your positive comments. And I can't wait for the session on Wednesday. If I triggered some thought processes within you, if I have planted some seeds inside your brain, then I would really love for you to message me either on Twitter or on Discord, on our Funding Pips Discord, and give me some things to work with. So this is where on Wednesday we would make it more actionable, and I would want to make case studies out of your life ideas, your experiences that I can bring into the session and break down. And then we can look into and, think about, okay, what are those worst case scenarios that could happen? What are the solutions that we could implement? What are all of those things that we could implement to help ourselves? And I will think long and hard about Stoic related activity, and either perhaps not a checklist, because I don't think it would relate, but very much trading scenarios and how we can implement Stoic features of pre-mortem and post-mortem into our daily routine. And I think that would be extremely helpful, because it can really just keep us grounded and remind us where the focus should be, which it should be on the things we can control. Okay, so you are all very welcome. Thank you so much for the feedback. You're all very welcome, and I am looking forward to Wednesday, 6 p.m. UK time. This is where we're going to catch up. And otherwise, thank you for today, and I'll speak to you guys soon. Take care. Bye bye. And thank you again for your wonderful feedback. Take care.